Hello and welcome to Bunnex Investment Group. Today we are going to talk about a simple trading strategy that is mostly traded in the London session. All the parameters and setups to look for will be explained, so please make sure to watch till the end. Before we jump into the whole video, be sure to check out our free Signals Telegram channel. The link is right in the description below. If you are new to this channel, hit that subscribe button and smash the notification bell icon. So, why should we trade in the London session? Here are a few facts of why you should look for setups in the London session. About 43% of all Forex transactions happen in London. The London session is one of the most liquid trading sessions. Remember, we have three major sessions, which are Asian, London, and the New York session. So, this fact is actually revealing that the London session is one of the most liquid trading sessions. Due to the high volume of buying and selling, major currency pairs can trade at extremely low spreads. Most trends begin during the London session, and they typically will continue until the beginning of the New York session. So, this is the strategy definition, the London session strategy. This strategy employs a technique used by market makers to trap traders, usually price bounds, on major key levels in the market, convince several traders to take trades. Market makers use this hype to issue stop-ons, taking off all open trades. Below is an illustration of this explanation. As we always know that our market initiates in the London session, in the Asian session, In the Asian session, there is little to no activity. Therefore, the market usually ranges in the Asian session. After the Asian session, they induce a false breakout. This is an induction point of having traders to commit into positions so that they can clear them after. After this small induction, there comes a bigger induction to the major key level of the market. At the major key level, most traders are convinced to take positions where in actual fact being induced again in another direction. Market makers is where they will come in to induce to actually clear the board by issuing a stop hand. The stop hand usually will pass through the major key level that was determined by traders. So trading at this zone will give you an edge to be out of those being baited to take their stop losses. And after that stop hand, there will be a long sustained run until the beginning of the New York session. So to simplify the process as much as we can, the implied key level will be the 200 EMA, and to validate our entry on this strategy, we need to see two touches on the 200 EMA in the London session. So basically we are looking for two touches on the 200 EMA in the London session. Do not worry, I'll illustrate this on the charts. So here are the strategy parameters. Trades should be scanned from 7:30 GMT time. So you can actually convert this time to your own time zone so that you know when to start scanning for trades. To enter, we will need two clear touches on the 200 EMA in the M15 time frame. We will only enter after seeing any candlestick reversal pattern on the second leg or the second touch of the 200 EMA. The stop loss will be at 25 pips and the take profit will be at 50 pips from the entry price. So let's go on the charts so that I'll illustrate this explanation. Welcome back. This is euro against dollar, And from the strategy, we've just said after the Asian session, in this scenario, Asian session ended approximately at this point, meaning that this was our point where we were starting to scan for our setups. Our first touch was actually issued here, and this was an induction. So most traders will be most traders' positions will be around this region. Then after that, the market makers come back and touch again. This move was actually meant to clear the board and also to trap traders long, and they quickly pulled off from this region. So your entry was definitely going to be at this point, and you were going to have your stop loss around this region, and you had your easy 50 pips. And actually you had that 50 pips in only 3 candles. So on our second example, this is euro order against the dollar. After Asian session, the Asian session completed at this point, and we were starting our scan started here. This was the first touch, also creating the major market key level and induction of traders in the opposite direction and returning for their stop losses. And your entry was definitely going to be after any one of these candlestick reversal patterns, and you had your easy 50 pips, and your stop loss was only 20 pips, just below this just around this region. Then on our third example, we have USD against Canadian dollar. On USD against Canadian dollar, we had our first touch. Our Asian session ended around this region, and this was now the London session. In that London session, our first touch was here. Then our second touch was at this point, and our entry was definitely going to be on this railroad track candlestick reversal pattern, and we had an easy 50 pips, and our 25 pips was around this region. Another example is on GBP against odd. We had our first touch here after Asian session, then our second touch at this point. Then our entry point was definitely going to be after this candlestick reversal pattern, and we had our easy 50 pips in only 3 candles, and our stop loss was definitely going to be below the entry point with 25 pips, which is around this region. So basically that's what you'll be looking for. Whenever you get to the charts, avoid trading in the Asian session. Wait for 2 touches on the 200 EMA. This scenario, the 200 EMA is the black EMA. Wait for that to occur, and then take your trades on the second touch. And on that second touch, wait for a candlestick, any candlestick reversal pattern on that second touch, then enter the market without fear. As always, I say this in all my videos: without discipline, you will never be consistent, and without consistency, you will never achieve this goal. And if you are not willing to put in the effort for this fact, trading is definitely not for you. So do a lot of meditation and stick to the only trades that we've discussed, and do not give yourself pressure, as the social media is flooded with fake gurus right now. In conclusion, follow your plan without deviation, distracting thoughts, or hesitation to act. On that note, thank you for watching. Like and subscribe, and check out our free Signals Telegram channel. This is the link, and it is actually also in the description box below.